Okay. So you are here today for the Nonprofit Association Accounting webinar series. This one is Basics and Best Practices with the McKelvey Group. Today we're going to talk about the structure of the accounting system and some of the best practices for documented policies and procedures and tools to help you execute the tasks. Again, this is a CPE, CAE eligible webinar for 1.5 credits, so be sure to answer all the questions that come up so that you can basically give us that timestamp that you're here and you're paying attention. Let us know all of that in the chat. Most of you, I think, are not first timers, so you kind of know the drill, but if you have any questions, do text Jenny or myself and we can help you out. Our course format today is, as you all know, we go through an explanation of the format, and then we are going to introduce our speakers, and then we get to the amazing Ask the Audience slide. That is kind of sort of your first CAE, CPE question, so be sure to be looking out for that. It's also your chance to let your instructors know what you're hoping to hear about today and what's really important to you. And then we have 65 minutes for the actual webinar itself and the Q&A. So be sure that your first and last name is on your Zoom ID tag so that we can give you credit for that CAE, CPE credits. Use the chat button, please, to ask your questions. Really, truly put those in the chat, because the thing is if you're thinking it, the odds are somebody else is thinking it too. So don't be shy. You can unmute yourself. You can elaborate on that question. We really do desire for you to have an interactive webinar with us. We do believe that that sets the tone and really makes our webinars what are so great. So you can either put your question in the chat. You can use the raised hand function, which you can find under the participant icon. Gosh, that was hard to get out. You can find that under the participant icon, and it pops you to the top of the screen so we can see you more easily. US Transactions Corporation is a sponsor of all of these webinars. So you know us as UST Ed, but what you may not know is that we're also US Transactions Corporation. That is our parent company. That is what we do. We are credit card processing and payments ecosystem. So you can see a slide that I have on the screen that if you want to have a conversation where you've got some pain points on whether it's PCI compliance, reconciliation, fraud issues, or just saving money, give me a chat. You can reach out to me on my email or you can call me, but I can have a conversation with you that could ease some of those pain points for you. So if that's something that is interesting to you, feel free to reach out. Otherwise, that's okay too. We're glad that you're here. So today with you are Gerardo Martinez and Tracy Vanucci, both with the McKelvey Group. Gerardo is the accounting consultant and Tracy is the controller. They are your subject matter experts today and your instructors. And before I hand over to them, we are going to go to our Ask the Audience slide. Most of you know what to do. Go ahead and let us know what you want to get out of this webinar today. Remember, this is your chance to let your instructors know what's really important to you out of this webinar. So what's top of mind for you? Go ahead and put that into the chat. And while you're doing that, this is question 1 for CPE credits. So go ahead and get those answers rolling in. I will read some of those to your instructors while they take over the screen and start sharing their deck. All right, so I'm waiting on y'all. Here we go. Sybil wants to know best practices. Go ahead and let us know what your top of mind is today. It's kind of, when we're in basic and best practices, yeah, it's pretty self-explanatory there that it's best practices, but you might want something specific for yours. Tips from other colleagues, that's a good one. Yeah, we learn from each other. Best practices for year end, common statements to be familiar with. Back to basics since I've been removed. General overview. These are all great. All right, so with that, Jason, Tracy and Gerardo, I'm going to hand over to the both of you.
Okay, great. Thank you. So welcome everyone to this accounting webinar specifically directed to nonprofits and association companies. If we may go to the next slide, please. Once again, thank you, Julie. My name is Gerardo Martinez. I'm an accounting consultant at the McKelvey Group. I work with different companies, companies specializing in for-profits, non-profits, and government contractors. I'm a certified pro advisor with Intuit, both on QuickBooks Desktop and QuickBooks Online. And it's a pleasure to have you all today. It's gonna be my first webinar. Excited and nervous at the same time, but happy to be here.
And I'm Tracy Vanucci. I'm the controller at the McKelvey Group. I manage all the finances, accounting operations, coordinating and directing the preparation of budgets and financial forecasts, and preparing, publishing monthly financial statements. And I've worked with clients in both government contracting and various commercial and nonprofit organizations. I'm excited to learn to hear more about your companies as we go through this presentation. So, like Julie said, just feel free to put in any questions in the chat, and we'll be sure to try and get them answered.
Great, thank you. All right, so let's start with the first question. So take a little time to think. The question is, for those of you who are part of a nonprofit or for a association, would you consider your books to be currently effective, efficient, and compliant? If so, please type in your answers in the chat box. I would like to hear from you. And I mean, it's okay if you don't know. I mean, sometimes people we hear that, yeah, they're familiar with nonprofit accounting. They could say that their systems are set up to be effective. But as with everything, there's always room for improvement. Probably some of you might not be able to answer it. You could say maybe it's in the process, and definitely we also want to hear from you. And some of you probably have never heard of accounting at all. Maybe as one of you were saying, it's been a long time since you've worked with accounting. So, and you want to obtain a refresher, and we're happy to help you with that. So, see a couple of
Gerardo,
answers.
this is Jacelyn. I can see that in the chat, a lot of people are saying that they could use some tweaks. So people are saying in most cases, but could be better. Suzanne over here says it's efficient and compliant, but not user friendly. Suzanne, can you elaborate on what system you're on? Suzanne, are you there? You may be on mute. Okay, we can move on if Suzanne's not around.
Not a problem. We can just continue as schedule. See that more people are joining in. For those that are joining in, the polling question is: are your association books set up to be effective, efficient, and compliant? Feel free to type in your answers in the chat messages as faithfully as you can. But really, this is more of a matter of not judging how your accounting system is, but just a matter of letting yourself know if there's any room for improvement. Okay, so why don't we go over the agenda for today? So hopefully the agenda for today will be able to help us answer the question that we just asked. Okay, so we're gonna be going over the most common questions that nonprofits have. Some of these questions may be pretty obvious for some of you. Some of these questions may be questions that probably you know, but would like to obtain a different perspective on. And as many of you were saying, you would like to also obtain best practices on how to set up your accounting system. We're gonna go specifically over those best practices and tips shortly. So why don't we go over the first topic, which is what is accounting? So accounting, there's many definitions. With accounting, if you Google it, you can come out, you can find different definitions. Some of them are pretty fancy, like accounting is a language of business, or even if you look online at Wikipedia, it's going to show you that accounting is the process of recording financial transactions and making reports out of it. But in short, our simple definition of accounting is that it's going to be the process of recording financial transactions pertaining to business. In other words, accounting helps you track your finances. Okay, so what things can we track with accounting? Specifically, there are 5 things. Number 1 is the money that you owe. Okay, money that you owe. That may be to third parties or that may be to people within your association. There's also money that you own. There's money that you obtain. So a nonprofit may obtain money through different ways. The most common way, that could be grants or funds. And then there's also money that you spend. So as you know, companies, just as for-profit companies and nonprofit companies, they have different types of expenses. Some expenses are applicable both to for-profits and nonprofits, such as utilities, such as rent, such as office expenses. So all of that, it can be tracked with accounting. And finally, something else that we can track with accounting is your company's worth. If we may move to the next slide, please. Okay, so now that we have a definition of accounting, which is tracking finances, we also have to understand that within accounting, just as with any other field of finance or any other professional field, there are different branches, okay? And so each of these branches, they have their own purpose and their own rules. So we have 3 examples of different branches of accounting. We have financial accounting, we have tax accounting, and we have cost accounting, okay? So for financial accounting, this is the one that I think would come first to our mind when we're talking about accounting, and this is the one used by businesses, okay? And so financial accounting uses what is called Gaap. Does anyone know what Gaap is? Okay, for those that don't know, Gaap refers to generally accepted accounting principles. Yep, that's correct, Wendy, thank you. So we also have tax accounting, okay? And so each of these branches of accounting, as I was saying, they have their own purpose, but that doesn't mean that a company that is for profit or a company that is non-for-profit could also benefit from that branch of tax accounting, okay? As you may know, even though nonprofits don't pay taxes, they are always subject to regulations by the IRS. There's filing regulations such as 941, which are related to employment. There's the 990, which is a common report that each nonprofit files on an annual basis. And so tax accounting basically focuses on tax preparation. Finally, we have cost accounting. So cost accounting, it's mainly used by federal contractors, okay? And it follows what is called the FAR and the CIS. So these are basically used mainly for companies that are contracting with the government. Also, most of the nonprofits do not contract with the government because as you may know, they're not in the business of generating profits. Some tools of cost accounting may also be used on financial accounting and not-for-profit accounting. One of those rules, I'm sorry, the lights are off. Give me a second. Okay, thank you. So there are different tools that may be interchangeably used within the different branches of accounting. For example, we have one tool called labor allocation, which is specifically tied to cost accounting, but may also be used in financial accounting and not-for-profit accounting. So I would like to ask all of you, if we may move to the following slide. What other branches of accounting do you know of?
Cash-based accounting,
Okay, so we're
fund
seeing some
accounting.
responses in here. Wendy Chow, correct. Fund accounting is another branch of accounting. We also have civil. I'm hoping that I'm pronouncing that correctly. Auditing, correct. That's another branch of accounting. Amanda, Nicole, although I agree with you, cash accounting is more of a type of measurement of accounting. So basically, cash accounting can be used among the different branches of accounting. It can be used within financial accounting, it can be used in cost accounting and tax accounting. Auditing, that's correct. Forensic accounting, that's a good one. All right, so great answers from everyone. Thank you. Okay, why don't we move to the next slide? Okay, so we have now, we're now talking, given that we defined that there are different branches of accounting. One of those branches of accounting is called fund accounting, okay? And fund accounting is specifically used by nonprofits. It is also used by charitable organizations and by religious organizations. And I think what if anything, I would like you to get out or take away from today's webinar is that the purpose of accounting is that it focuses on reporting accountability rather than profitability. Okay, so that's the main key of understanding fund accounting, which compared with financial accounting, it mainly focuses on tracking profits. With fund accounting, the main purpose is of tracking accountability. Okay, so fund accounting, it is ruled by two sets of standards. They are called the FAS 117 and the FIN 46, and it also allows organizations to accurately report how much is being received and spent on a fund-by-fund basis. Does anyone know something else from fund accounting that they would like to share?
I don't, Hardo, but actually, I like that point 3 that you mentioned, that fund accounting focuses on accountability versus profitability, which is more for like commercial for-profit companies. It's a good way to put it, and I didn't know that.
Great. Okay, so any questions so far? Why don't we check out the chat, see if there's any questions from the audience before we move on? Do we have any specific questions so far? Anything that we would like to obtain clarification on? Okay, we may move on to the following slides. Okay, so as we were talking about a couple of minutes ago, financial accounting and fund accounting, they are two different branches. So financial accounting, that one is mainly used by for-profit companies, and fund accounting, that is mainly used by nonprofit companies. Okay, so as expanding a little bit more on the point 3 that we saw on the previous slide, that fund accounting focuses more on reporting accountability rather than reporting profitability. In other words, what that means is that with financial accounting, businesses want to report how much money is being earned and owned, while with fund accounting, rather than reporting how much income is being generated, because as you know, nonprofits don't have a primary purpose of generating profit. Fund accounting helps nonprofits to track how much is being spent and how much money is available. So I really like this graph because it provides us with a perspective on how general accounting and fund accounting differ. As you may see, with general accounting, there's only one single fund or one single pool of money. And out of that pool of money, um, we have income coming in and we have expenses coming out. So we have money coming in into the same pool and we have money coming out of that same pool. However, with fund accounting, it's a little bit different. As you may see, um, even though a company may have a general fund of which income comes in and expenses go out, there are also different funds within a nonprofit. So there are restricted funds, there are unrestricted funds, and there are temporarily restricted funds. And so out of each of these funds, a nonprofit has to track income and also has to track expenses. So this leads us to our second point. So while for-profits may be subdivided into divisions and business segments, so let's imagine Microsoft. Microsoft, they have divisions in North America, they have divisions in Europe, and they have divisions in Asia. So now when we look at nonprofits, even though nonprofits may be subdivided into shorter segments, typically these are divided into what is called funds. So that's the main difference, the subdivision. When for-profits are divided, they are generally divided by areas of or where their business is being generated, while nonprofits they are being divided into what is called funds. So we're going to be looking at what funds are shortly. As we were saying, can we actually go back? Sorry. Okay, now point number 3 is as the picture shows, with financial accounting, all of the finances of a company, they are being tracked out of a single fund. Meanwhile, with fund accounting, the finances are being tracked by separate funds. As you may see at the bottom, even though a company a nonprofit might be a single entity, they may have different funds out of which they have to keep track of money coming in and money coming out. Okay, and now for item number 4, that another difference between financial and fund accounting is that meanwhile for-profits use the reports called the balance sheet and the income statement, nonprofits also have the option to use them. However, because they're not in the business of making money, and those reports specifically showcase the amount of money that a company is generating, nonprofits have decided, or nonprofits find it much better to use the reports that are called the statement of position, the statement of activity, and for some, and this is optional, this usually applies to big nonprofits, a report that is called a statement of functional expenses. So we're going to go into more detail of what these reports are shortly. So why don't we move to the following slide? And I would like to ask all of you that are working with a nonprofit, if you could provide examples of funds that your organization uses.
Okay, I see some funds
Mhm.
for endowment, restricted and unrestricted grants. PAC. Okay, let's go to the next slide here,
Mhm.
Kristen. All right, so this slide, what is a fund? So just to kind of back up a little bit, a fund's like an area or purpose within your organization that needs to be tracked separately from anything else. Basically, you can kind of think of it like as a smaller nonprofit within your nonprofit organization. So a fund is like a separate company within your organization, and each fund has its own self-balancing set of books to track the assets, liabilities, revenue, expenses, the fund balances, and the net assets. As you see in that picture, I mean, basically, if you had a general fund and you received a $50,000 grant, like for a designated fund, it could all go in the same bank account. So then the bank balance would still be 80,000. But on the books, we would separate, and it would be, you're keeping a separate track of the 50,000 and how it's being used. Because with specific types of funds, as some of you may know, the donors want to know, I want to donate for this specific cause. And we also have to track how those expenses are used or how those funds are used. Excuse me. And it's just, it's important to be transparent when you're receiving funds, especially for a nonprofit, because donors want to know how their donations are being used. Let's go to the next slide. And so what are the different types of funds? And, as we had noted before, there are restricted funds, there's unrestricted funds, and then somewhere in the middle are temporarily restricted funds. So restricted funds are funds that must be spent on certain projects and activities at your organization. And it ensures that when donors are, contributing to your organization, they're being used for an intended purpose. And usually donors to a restricted fund require that the nonprofits provide them with a spending report on how the funds they provided were being used. And so it's very important that from your accounting system, you can pull, how those funds, when they were received and how they were used. Unrestricted funds, on the other hand, are funds that can be spent on whatever aspect of your organization requires the greatest need. And it may be used to support other funds that have like depleted balances. And donors may or may not require a spending report when they contribute to your unrestricted funds. And then that middle area of the temporarily restricted funds, these funds should be spent on certain projects and activities at your nonprofit up to a certain period or condition. And after that, they become an unrestricted fund. And so like an example would be, if the goal of a designated fund is achieved, then the donor may allow the remainder of the funds to be used, however the organization needs. Does anyone have any questions on that or any comments? And I think some of, like when you're saying people who have grants and sponsorships, like I'm sure you're familiar with the like travel grants, it has to be used for travel.
Yes, Tracy. Something else that we also have to consider is that there may be sometimes some instances where when a grant is received from a donor, sometimes it may come in as a restricted grant. However, there may be some situations where probably the donor and the recipient reach an agreement, and sometimes these restricted funds become unrestricted funds. And there may be instances, for example, we have a nonprofit that we do the books for, in which in several occasions, and this is mostly due to COVID, some of the grant that was received came in as a restricted fund, but given that the company was in a dire need of cash because they were basically wanting to cover, the lights went out again. Yeah, because they wanted to cover certain expenses. The donors and the recipients were able to discuss, and the donors allowed the grant to be changed from a restricted fund to an unrestricted fund. So these changes may happen, although they are they usually occur in special circumstances. Uh, they happen, but I think one of the best things that we can recommend people or organizations that deal with this is to keep track of documentations. I mean, we've been dealing with audits. One of our clients has been having this audit, and this particular situation where a restricted fund became an unrestricted fund was something that the auditors kept asking us about. And thankfully, because we had documentation, we had conversation, we had all of this, it really helped um, the organization prove that this was in fact something legitimate.
And then on the next slide, what we're talking about, I mean, like what Gerardo was referring to, you know, how would one know if a fund is restricted or unrestricted? And typically within the grant agreement and the proposal, the funding request letter, it will say, you know, that the donors are indicating this is how I want our money to be used specifically for a restricted fund, or they just want to donate to the organization. And just because it's written one way, like if they initially sent it in as a restricted donation, as Gerardo noted, you know, it could be later discussed and, you know, an agreement could be reached where it switches its categorization. And then when organizations are asking for donations, they can sometimes, just to, you know, alleviate any confusion that may occur, is that they can list the different types of funds to which a donor could contribute to, and then, you know, like also list an unrestricted fund. And then that will help donors know, you know, how their money will be used. And then from the organization's point of view, you know that, okay, you know, if funds are being contributed to a restricted fund, we need to make sure that we categorize it as so, and then track it properly. And so I think that leads us to our question. Are there any other ways your nonprofits identify the restriction level of a fund, like outside of what we had noted with the grant agreements and proposals? Nope. Like at the Jonah Communications.
Yes, I agree. I agree with Amanda. I mean, with most of this, sometimes defining the restriction level of a fund doesn't come that easily, and that's when, you know, a lot of back and forth between the donors and the recipient has to occur, where they can get something in paper that actually defines the restriction level of the fund. So I mean, although ideally it should state it on the grant agreement, sometimes this doesn't happen. So yes, I agree with Amanda. Some communication has to happen sometimes to properly identify the restriction level of a fund.
Okay, so that what we were kind of talking about was all about the different fund accounting, what it specifically is a fund, and how, you know, our funds are unrestricted or restricted. And so it brings us to the next portion of our webinar, which will be what are the main components of an accounting system. And I think, you know, the backbone of it is the chart of accounts, which lists the financial accounts or the buckets to which transactions can be assigned. And this goes from assets, liabilities, the income and expenses. And these accounts, as many of you know, are used to prepare the financial statements. And whether it's a for-profit or a nonprofit organization, you know, it's a different type of chart of accounts, but the chart of accounts is the backbone of where you have to start with for your accounting system. And then the other components within your accounting system are some systems listed as customers, but basically with nonprofits, that's, you know, your donors, your grantors, how the money comes into your organization, and then your vendors or your employees, the money that goes, the organizations and the people that the money goes out to. And so that's like the main components of the accounting system. Anything to add?
Yes, and so backtracking to, so in the first slide, we defined what accounting was. We also said that accounting tracks 5 things. Okay, so specifically the chart of accounts The items called the assets, the liabilities, the equities, income, and expenses. Each of those track the 5 things that we mentioned a couple of minutes ago.
Okay, so for those of you who are working within your accounting system, do you guys want to kind of say how your organization structures customers within your accounting system? Your customers being the donors, the contributors. Oh, sorry, that's on the next question, Kristen. Sorry.
And so following up with what Brittany was was commenting is that we've seen that with nonprofits is where some nonprofits, rather than typing in all of their customers into their accounting system, some, such as some companies, some nonprofits that do have membership databases, rather than listing their thousands or hundreds of members that they have, they itemize them on the database, and then when they're doing the bookkeeping, they just simply enter the total revenue. And that's a common practice. That is an acceptable practice.
I'm interested to hear from Wendy Chow. So her comment says that we have it tracked in the CRM, which is Customer Relationship Management System. I've not seen this before, and I wondered, Wendy, if you could elaborate what CRM do you use and how does it link to your accounting system?
Yeah, so we use IMIS for our CRM, and just as Geraldo was saying, basically it tracks all the transactions that are done by the customer, like the members when they register for a course or something else, or their memberships, and then we just take the total amount from the month-end reports from that system and put it into QuickBooks. So
Gotcha.
similar to Brittany.
Gotcha.
Yes, and that's actually relatively common because it actually saves you having to put all of those individual records into your accounting system. And sometimes you don't want to track that information in the accounting because it's private. You don't want to have it available to others. So it's not unusual to have this, what would be called the Subsidiary Ledger, basically, which is the customer's tool. It tracks all the individual transactions, then in batches or in months or in periods of time, it's sent over to the accounting system and maintained. It's a very common thing. It's actually a great way to do it, honestly.
So it's not actually a link. It's more of like you track it here, download the information and upload it into your accounting system. Which
Correct.
I think
the totals all match. The totals match out completely that way. It's just that you don't have all the record detail for all the individuals who may have donated, the members in this case, because that would just be a lot to track in any accounting software tool.
Yes, I agree. Makes sense. Thank you.
All right. I think we can move on to the next slide. Okay. So, and this is something that I think may have been asked. Looking at the chat, I think this would be helpful for all of you. And so one of the basic things whenever an accounting system is set up is, as Tracy was mentioning, the proper setup of the chart of accounts. Okay. And so as you may recall, accounting tracks 5 things. It tracks the money that you own, the money that you owe, how much a company is worth, the money that is earned, and the money that is spent. Okay, so specifically, the items called assets serve the purpose of tracking how much a nonprofit or a for-profit company owns. The liabilities, on the other hand, tracks how much an entity owes, that is, owes to its employees, such as, I would say, uh, unpaid payroll, or owes vendors such as with accounts payable, or owes another organization. Say maybe they have another grant that they have to pay to another nonprofit. So specifically, the assets or the accounts called liabilities serve the purpose of tracking how much a entity owes. As for equities, although equities, this account may not be uh, that used with nonprofit accounts because equities serve the purpose of tracking how much revenue or how much earnings a company has retained. Um, there may be some variances with nonprofits, and they sometimes use what is called net assets instead of equities. And so basically equities or net assets, as you may want to call them, they serve the purpose of tracking how much an entity is worth or how much they have um, available after paying their liabilities. Then we have income, which tracks how much money is earned. Sometimes grants may be classified as income, sometimes fundraising may go as income. And then we have what is called the cost of goods sold and the expenses. And so usually we recommend that the cost of goods sold and the expenses be kept separate, using the 5,000 for basically expenses that can be directly tied to revenue, and 6,000 to 8,000 basically to expenses that are generally used to track anything that is not directly related to the revenue, such as office expenses, such as payroll, such as utilities. All of those expenses can be tracked in the 6,000s to 8,000s. And finally, we have the 9,000s, the other income and the expenses. And although this may not be very frequently used by nonprofits, it is something of particular interest because recently, with a lot of nonprofits having their PPP loan forgiven, they might be wondering, how do I classify this into the accounting system? Do I classify it as a liability or a negative liability? Do I classify it as income, or do I classify it as a negative expense? So to answer that, we at the McKelvey Group, we recommend that for all companies that have had their PPP forgiven, we recommend that this be recorded as other income on their accounting system. Okay, let's move on. So one question for you all, given what we just talked about, which accounts would you use to track how much the company is owed? Would it be the assets? Would it be perhaps the equity? Would it be the income or the expenses? What do you think? Okay, great. So far, all of you have answered correctly. Congratulations. You're correct. Assets track how much a company is owed. Specifically, the accounts called accounts receivable that keeps a subsidiary ledger of how much a company or a nonprofit is expected to receive from outside parties.
Okay, and so then just to discuss a little bit more about when you're setting up your chart of accounts, many of you already have a chart of accounts set up, but if you're starting a new nonprofit or a company, or even if you're wanting to revamp your chart of accounts with the new fiscal year, one of the things that we always try to emphasize is just only create what you need and don't go into too much detail. We have seen some chart of accounts where like it's one account line for each vendor. And then when you get into that much detail, it's harder to see how your company is doing because there's too many line items, if that makes sense. And so you want to look at your company to see like on the income line, do you want to like track membership and how, your grants or, like bigger pools of income. So then as you're looking back historically and then forecasting forward, you can kind of see those main groupings. And then as Gerardo was saying, with the cost of goods, that's usually where we categorize or where we account for things that are directly related to receiving income. And then the 6,000s to 8,000s, the reasons why there's, a bigger gap of that, a bigger span of that is we'll track things that are related to payroll, fringe, if you offer your employees health insurance or their payroll taxes, things like that, we can kind of put into one grouping. Overhead expenses, to covering rent, covering your general liability insurance, so you want to look at your expenses for your organization and see what makes sense about how to group it. Any additional comments on this from our team?
Yeah, Tracy, I think just to kind of reiterate what you're saying there about the level of accounts is that you don't want the chart of accounts to be at the transaction level or a vendor or a customer level because that's too much detail. You also don't necessarily want to have only one single level of accounts. The idea is to have a meaningful balance, and that's true. It's unique to each organization. But what it comes down to, what is the management group, what is the leadership group, what does the operation groups need to see produced easily out of the accounting software in a reporting format so that it makes sense to them. So one of the most important conversations, I believe, is between the accounting folks and the operational folks in the nonprofit to say, how do we want to see these reported out each month to us so we can see how we're doing? Just a comment. Unless you disagree with me, Tracy. Right?
Well, I mean, it's also helpful, as Matt was saying, was to do it on a meaningful level because you want to budget for the next year because nonprofit organizations are not, they're not built to make a profit, but you also need to make sure that you're covering all your expenses. So if you have them in meaningful groups, you can kind of see how, forecast out and see that you'll have your expenses covered. So if, your employees are getting a raise or if you are wanting to expand a program that you have enough to cover those expenses. And then going back to some of our earlier slides, do you want to go to the next slide, Kristen, about tracking the funds. And so, we have to track all of the income and expenses for the organization, but within each fund, like with restricted fund, we want to track that to make sure that whatever comes in is being used for that specific, any expenses that come in under a restricted fund are, being used within that same pool. And so in QuickBooks, I don't know, I know a couple of you had mentioned that you use QuickBooks as your accounting system, and that's one of the more common ones that we tend to use, but there's a function called classes. And in that, it basically kind of vertically separates out your statement of activities. And so you can see for that class or for that specific fund, what the income is and what the transaction levels are. And then, you can also roll it up to see how it is at the organization level. But when you use classes, you have to make sure that every transaction is identified to the proper class, whether it's the unrestricted general fund, or if it's a restricted, like the specific restricted fund or temporarily restricted fund. But you want to note when the money's donated and then when the expenses are coming out, that it's assigned to the proper class or to the proper fund. Does anyone who does use QuickBooks or another accounting system, like what accounting systems do you use besides QuickBooks? I know somebody else said Great Plains, Sage. And so I feel like a lot of these accounting systems are all kind of similar. So if they don't have classes per se, they should have something to help you segregate out the fund accounting.
And I do know, Tracy, for people who use QuickBooks, once you set up that class field, it will prompt you when you're putting in an entry. It will force you to pick a class. Or at least you get a pop-up message saying what class is it. That's one thing that's really nice about it. Because you're right, you do need to make sure that every single line item is categorized correctly in the right class. Otherwise, your reporting will be all wrong.
And I mean, even if your day-to-day or your weekly entries, if you skip it, like when we do the month-end close and definitely the year-end close, you know, we review like all of those transactions, and you can kind of just run a report to make sure that everything is in a class. And if they're not, then you can kind of go back and make edits.
Hey, Tracy, I just want to do a time check for you real quick. We're 5 minutes till 2 Eastern time. Just want to make sure that you get to the key points you want to get to in the presentation deck.
Yep.
Within the remaining time. I know we have more time. I was saying within the remaining time.
Yes, we are heading into the different types of financial statements. Oh, sorry, Kristen.
All right, so nonprofits. So nonprofits, they, in short, they use 4 different reports. They use the budget, they use the statement of financial position, they use the statement of financial activities, and they also use the statement of functional expenses. Okay, so the first one, the budget, and I think we can all familiarize with this one. I think this is a more common budget, even with a more common report, even outside of nonprofits. And so basically, the purpose of the budget is to help or to report to outside members or people not working on the accounting department of a nonprofit, to report how much money a entity expects to receive or how much money a entity expects to spend within a defined period. Usually a budget is prepared on an annual basis. So like actually right now, one of our nonprofits, it's time to prepare budgeting because as you know, 2022 is just around the corner. And so one of the key things to pay attention to when preparing budgets for nonprofits is that, as we were mentioning, given that there are different funds within a nonprofit, the key aspect in preparing this report is that a budget must be prepared by each type of fund. So if your nonprofit has 5 different funds, then that means that a budget must be prepared for each of those funds. So now if we may go to the next one. We would like to ask all of you, how often does your nonprofit prepare the budget, or sometimes this is called the forecast? Is this perhaps prepared monthly, like to maintain accuracy, or is this perhaps updated every quarter? Because I know that sometimes some companies even have a 5-year budget. But as looking at the answers, I see that most of you prepare a report on an annual basis, which is something recommendable. Okay, then we move on.
All right, and so this one is called the Statement of Financial Position. For-profit organizations will tend to call it, it's the equivalent of a balance sheet. But the difference, as Gerardo had noted earlier, was so you have your assets and liabilities for both the balance sheet and the statement of financial position. But instead of the equity, since we're not, you know, nonprofits are not there to make a profit, there's a net assets. So from the top, let's see, the report lists the assets, and it lists it usually in the order of the speed that they can be converted to cash. So, you know, the cash line would be bank accounts, savings accounts, and then they have property, plant, and equipment assets, and then other intangible assets like brands and trademarks. And then the second section for liabilities, that's also usually listed in the order of how soon they are due. So accounts payable will be the bills that you receive from your vendors that are usually due, immediately or like net 30. If you have grants that are due to other organizations and other debts, those will also be listed under your liabilities. And until the PPP loan was forgiven, that would also fall under there as a liability. And then the net assets are the, as noted, like nonprofits don't retain earnings. They're just put back into the organization for use. So no one owns a nonprofit, and so there's really no equity to be had. So normally we have the assets equaling liabilities and net assets. That's how you balance it out.
Okay. Following is the statement of financial activities, and this is more like the version of the income statement for nonprofits. So even though nonprofits have the option to use the income statement, because as we've said many times before, they're not in the business of making profits, but rather track the changes in their net assets. That's why the statement of financial activity helps a nonprofit break down the revenue and the expenses into restriction levels, so they can do it into without donor restrictions as a one column, and with donor restrictions as another column. Finally, as and this is sometimes, so this report is sometimes used along another one, which is called the statement of functional expenses. And so this other report, which we'll see shortly, is used in conjunction with the statement of financial activities. And so basically, rather than, if we see here the line item that says shelter and veterinary services, 77,000. So a nonprofit may have the option to use both reports, where they only input the total in the statement of financial activities. But if they want to break down or go into more detail into what those $77,000 went into, then they have the option to use the statement of functional expenses. So at the end, you'll see that based on the difference of revenue over expenses, sometimes revenue may be higher, or sometimes there may be a loss. At the end, the bottom line will calculate how much there was a change in net assets.
And I will say that for this, actually changes into it, but as we're saying, like with the fund accounting, like on this example, they just split it into, their donors without restrictions and donors, with donor restrictions. But you could also like list out in each column the specific funds, and then that way your donors could see, okay, for this specific fund, here are the operating revenues, here are the operating expenses, and you can kind of see it down the line vertically. And then still, for the company, for the board, as they're reviewing the financials, they can see it with each fund, but then also the total for the organization. So something like this really helps looking at it both, across and up and down. Sorry, Kristen, you can go to the next one. And so the previous one also, it's you can put in things like on accrual basis. So if you're expecting a pledge or a grant, depending on how your organization records it, it could already be recorded in the statement of financial activities, but the cash may not technically be in your bank yet. But on this financial statement, it's called the Consolidated Statement of Cash Flows. And this is a cash basis. So it's really reports the changes of cash equivalents during the accounting period. And it's because it's a cash basis, it's not easily manipulated by the timing of non-cash transactions. A lot of times when you have a large fixed asset and you depreciate it over a period of time, the depreciation expense is not really a cash expense. So although it will decrease the bottom line, technically all that money was paid out early on. And so something like this statement of cash flows will help you truly see in what's in the bank, what's been going through, like in and cash out. Other notes on this cash statement. So the top part is kind of, it separates it out, the cash flow from operating activities. And that would be, actual donations and grants that are received, interest payments, income tax payments, payments to your vendors, payroll, rent, that type of expenses, things that you do day in, day out, or, on an operating level. The second section is the investing activities. And so if you purchase or sell an asset, that's where the cash flow in and out will happen. And usually it's more cash out because you spend cash to make an investment to purchase new equipment or a building or an investment. And once it's sold, then it would be a cash out on this cash flow statement. And then the final section are more financing activities, which are sources of cash from investors or banks. But the combination of the three reports that we just showed, the statement of activities, the balance sheet, and the statement of cash flows, the combination of these three give a better picture of how the organization is doing. And there's, oh yeah, and one more on the next one, sorry.
Yes, and so this one is the statement of functional expenses. As I was saying, it is an extension of the statement of financial position, which is basically the income statement version for nonprofit. And so I was referring to a couple of seconds ago about the 77,000 that were shown in total on the other report. So if you see here specifically on the shelter and veterinary services, you can see basically the breakdown of how those 77,000 came out to be. So that's basically the purpose of this report. Let's move on to the next one.
Okay, so what are the best practices to keep your nonprofit organization, your nonprofit's accounting organized? And although a nonprofit's like the general and designated funds, it could be kept under a single bank account. Depending on the size of your organization, we may recommend having two bank accounts, one for the general funds and then a separate one from the designated funds. Within the accounting system, you would definitely keep them separate. But oftentimes, as we said, it's just depending on the size, the organization finds it easier to handle the funds in that manner, like having two separate accounts. You also want to make sure that you update your subsidiary registers, whether it be your membership base and seeing how the membership dollars flow through as your revenue. If you have fixed assets and you have a depreciation schedule, or if you prepay something like insurance and you allocate it out. Within your financial statements, you'll have numbers, but you want to have that supporting documentation, not just for when the audit comes around, but also to explain to your board members and to your donors how things are, being set in the accounting system. And another way to get organized is by having a financial calendar. And a lot of things are recurring, like preparing the budget, payroll, things like that. And so having defined filing deadlines noted on a calendar will help keep the board informed, as well as the operating admin people. And then updating your policies and procedures. A lot of times within an organization, everyone knows what they do. But if they ever went on vacation, would there be someone else who could pick it up and continue on with the policies? So having a written manual is very important to make sure you have consistency. And then also, when you have an audit, you can say, here's how things were being done. And so just a question that we wanted to kind of throw in the middle of this slide was, how often does your organization update your policies and procedures? If you guys want to enter that into the chat box there. not often enough. Annually, review quarterly. Yeah, I mean, I would say at least annually, just to kind of review to make sure that, you know, your staff are sure about, you know, what's going on and that there's been no changes as needed, but much less than annually. So yes, I mean, I would want to stress that. You can go back to the next slide, Kristen, which goes back to the list that we're going over. But having a policies and procedures, although it's more time consuming to build, once it's there, it's great when you have staff that join, new staff that joins, or even new board members to so they can understand, you know, how the workings of the organization is. I think it's very helpful. And storing your records. And a lot of our, you know, it's not just for the accounting for donors who want to know how funds are being used, but also nonprofit organizations will have their audits, and you want to make sure that you have all of your supporting documentation ready and to give it to the auditor, and it just makes the whole process that much less painful. But you can attach bills, receipts, grant documentation to the transaction within your accounting system. But if you do that, I would still also maintain a separate file. I think most people don't have any hard copy files anymore, but storing it to a cloud storage, you know, something that's offsite is a good suggestion. And then also when closing your books. So normally when we reconcile accounts, that's done monthly with the bank statements, credit card statements, things like that. And once you close them out, close your financials, whether it's monthly, quarterly, or at least annually, we recommend putting a password on the closed months. And that basically locks those financials for those previous periods. So there can't be any inadvertent changes. And especially at the end of the year, you know, when you file your taxes and, you know, those types of forms, you don't want to make a change after it's been filed. So we recommend monthly, but definitely at least at the end of the fiscal year. Other suggestions from the team as far as other practices or comments on this list? No. Okay. Any questions from you all about things that we may not have covered, as far as, I feel like we went over the common statements that you guys had talked about or asked about. Year end, you know, just getting your books, all your accounts reconciled and having your supporting documentation, your subsidiary registers. It helps close out the year and prepare for the next year's budget.
Tracy, I did want to go back to earlier in the presentation. I had asked Suzanne about, she had put something in the chat box about how difficult her accounting system was, and it could be used. She had audio issues and she might still be having them. So I want to ask for her. So her system is not a user-friendly system, and she says that it's really hard for her to pull information. A lot of times she has to manually pull invoices to get the information she needs out of her system. My kind of follow-up to that is, do you think that that has something to do with like the way the chart of accounts is set up? And if an organization has to go back and revamp that, how difficult would that be? I know it's a loaded question, but could that be done easily?
I'm not super familiar with Great Plains, I will say, but I mean, you can revamp your chart of accounts. I mean, I would recommend doing it at the start of the fiscal year, but it's something with it, especially with a nonprofit where you have to report to a board, you have to have a plan. So you have to have, you know, your old chart of accounts and where you want to map it to. And if you want to start using classes, things like that. But doing it mid-year makes it a little bit more difficult. And so I would not recommend doing that. It's not impossible. It's just not ideal.
Mm-hmm.
But yeah, I did see that, and I know that Great Plains is a little bit. There are some other accounting systems which are very particular in how you do it. but I would have to say that there should be a way to be able to get that information without having to manually do it. But unfortunately, I mean, it's something that we could look up, because I do, we have someone who knows Great Plains that we could find out more information and we could send that to you.
And then there was also a question from Amanda, if she's still on, that she had said that her system has rigid reporting. And if Amanda, if you're still on, could you unmute and elaborate a little bit more about what kind of reporting you'd like to see?
Well, we use Great Plains as well, and the chart of accounts is just really rigid and just makes it difficult to do a lot of flexible reporting. So that's just the way we're using Management Reporter on top of Great Plains. So you can get your reports out, just as not as flexible as I've seen in other systems.
It's not unusual actually with Great Plains to have a reporting tool added to it, meaning a supplementary tool. The cost, it's expense. You have to buy another, or at least get licensed to another tool to do the reporting. There is usually a balancing there between how the structure is set up and the chart account set up and reporting. But there's a reason for that rigidity in Great Plains, and in others, it's generally to force almost process on the software itself, as opposed to having process being developed by the users. It happens, and it's a part of the plan. But generally, it's going to be that there are reporting tools that can be added as an API that can pull data out of the account system and present it in the way you want. And it's always a cost-benefit decision for an organization, whether it's worth it or not to do that. It may be less expensive and less time-consuming to do the manual, even though it feels incredibly time-consuming at the time. It just depends.
Are there other ones besides Management Reporter that you would recommend?
No, we can actually pull together a list of that. It's something I'd like to make sure that actually links with Great Plains. Be happy to do that. We can follow up. We'll send it to everybody that's on the call so everyone gets the answer, but happy to do so.
Just to add what Matt was saying, I'm not in accounting, but I do work a lot in the payments ecosystem. And one of the things that I've seen is, like, for example, the person that's using IMIS, getting the information from your AMS system to your FMS system is also oftentimes very manual and very clunky. And I would encourage each of you to reach out to your, whether it's your developer, whether it is the person managing your AMS. Oftentimes they can write an API pretty easily or have one available from your AMS to your FMS. And that can also help you in that reconciliation process to maybe take a little bit of the burden off of you. I've just seen that frequently in my in the practice that I do.
And Julie, you're absolutely correct, by the way. And the other thing it does is not just about time savings, it's also improvement in accuracy, because every time someone's going to enter something in twice or manipulate data, there's the potential for an error. So again, it goes into cost benefit, but an API built between systems, all software is built today to communicate out and in electronically. They're not rigidly set up for not that. So yes, reach out to developers, even reach out to the software companies themselves. Oftentimes they have preferred partners and recommended vendors for doing things like that, because if you're having a problem with it, others are having the same problem. Just to be aware that you're not on an island alone, and it's not because you're necessarily doing something wrong. There could be ways to do it from a setup. It could be an initial system, but those are good points. So thank you, Julie.
For sure. And I'll throw one more best practice in there, if I may, that does go along with accounting for each of you. We teach this in our PCI compliance workshop, and I think the McKelvey team will like this comment. I frequently see people, if a fraudulent situation has occurred, it's generally going to happen through your payments ecosystem. So your credit card processing, right? Which is what I do. And frequently I see associations not taking the time. You're balancing your bank account and you're balancing that to your FMS system, but you're not going back and looking at your credit card processing portal. You're just assuming that everything's matching up, and that's where the fraud is oftentimes taking place. So taking that additional step one more time of making sure that you're pulling that information monthly as well and balancing that to your FMS and your AMS reports. So as we're talking best practices, I thought I would throw that in there.
No, that's definitely a good point. Okay, well, that actually brings us, I think, do we have another slide or something? Oh, we don't need to see pictures of me and Gerardo. But But if you guys do have any additional questions, please feel free to reach out to us. And like Matt said, we will look up that additional information about Great Plains and we will get that to you. Ooh.
And McKelvey Group, do you guys pretty well work with a lot of the back-end FMS systems so that, you know, it's not just Great Plains that you can give advice on, but also whether it be NetSuite or some of the other systems that are out there?
We've definitely addressed most of the systems that are used. Whether we've done the actual accounting or not just depends, because different organizations use different ones. One thing we'd always do is we're very straightforward. If we've used the system, we'll tell you. If not, we'll tell you. And we do have other partners and firms that we know of that may have more experience in one system versus the other. And we'll be happy to refer it, because the whole goal is to get the answers you need as an organization.
Love that. Thank you. That's great. Does anybody have any questions for the team while you have them here? Maybe something very specific to your association or practices, or something that you're struggling with board presentation, anything that while you have them here. We do have a few more minutes. Thanks, Chad. All right. Well, if we don't have any other questions, I do want to thank all of you for joining us. Thank you specifically to Tracy and Gerardo and Matt for being with us today. I do encourage each of you to reach out with any additional questions. This was a great review for many of us that work back end. You know, some of you are further along the accounting stream, but if you are staff, this is just a great review for a lot of the things that are standard daily practice. So as a follow-up, we will be sending the recording out in case any of you are wondering. It might be great for you to share that with your staff, people that you would like for them to understand the basic workings of why different choices are made. Anyway, reach out to McKelvey Group if you have any questions. They will be following up with some of the things they said, and I will be following up with the recording. Be looking for that. It's going to come directly from me. If you have any questions for any of us, do reach out. Be sure to check our website, ustranscorp.com/education for upcoming webinars. We do have a lot coming up in these last few weeks before the year end, because many of you need those CPE credits. Be sure to check that. And I think that's about all I have for you guys. Enjoy the rest of your day. And any final thoughts from those of you with the McKelvey Group?
The only final thought I'd like to leave with everybody, if it's okay, sorry, Gordon, I jumped in front of you, I'll let you do it, is, again, don't feel like you're on your own in accounting. It's oftentimes challenging when you're in a small or a mid-sized organization and you know what you know, you're dealing with what you're dealing with, but you're not quite sure. Reaching out to folks that can give you advice and guidance, and it doesn't mean us necessarily, right? We're always here, but it could be other accountants or other firms, other organizations. Build that network and find out where else you can find information besides having to pay for it. It's out there, and I think that's always something to do. Just don't put yourself in a corner where you're just hiding. Make sure you realize that you're not alone on the issues you have. They're common. Sorry, Gerardo, please.
No, nothing else, but yeah, thank you, everyone. It was a pleasure.
Thank you. Thank you, Julie, too.
Yeah, absolutely. And I love that. If you guys don't know it yet, and I'll release you after this one comment, I'm so sorry. But if you guys don't know it yet, your vendors, we are all here for you. We are cheering for your success. Utilize us. We have a depth of knowledge that we can bring to you and help you out. So be sure to reach out to your vendor community, because we really are rooting for you. And with that, have a great rest of your day, and we'll see you at the next event.
Bye.
Thank you. Bye-bye.